This tax bill primarily cuts taxes for households with incomes over $500,000. Here are some facts about that. So this bill is expected to lose $2.2 trillion in revenue from extending the 2017 Tax Cuts and Jobs Act tax brackets, okay? So a lot of what is so expensive about this bill is actually things that were set in motion in 2017. And those things were set to expire in 2026. However, this bill extends them, and it's the extension forever that costs so much money, okay? Politicians love to give tax cuts. Nobody wants to be the one on deck when we take them away again. A half of that amount, right? A half of the 2.2 trillion in revenue that we're expected to lose as a result of this bill, one half of that amount is because of tax cuts for households with income over $500,000. That is how I came to that statement that the thrust of this bill is about benefiting households with income over $500,000. All right. $1 trillion in lost revenue is coming from the extension of the alternative minimum tax called the AMT, which is a tax on the US's highest earners, okay? This bill spends 15 times more money on wealthy taxpayers than on average taxpayers. Again, that might sound partisan, but it's not. That's a fact. So listen to this. The average US family gets about $83 a month in benefit and tax benefit from this bill, whereas the top US families get $165 a day from this tax bill. Okay, that is 15 times higher. All right. Families making under $65,000 a year will see a program that they use or rely on cut. So it is a fair statement. It is a nonpartisan, fair, fact-based statement to say that this bill, one of its main purposes is to redistribute income from lower income Americans to high income wealthy Americans.